for me, I think the entire Chinese tech sector is all, the other companies are pretty, in my opinion, are all worth following because as we can see now, the global AI race is pretty much a competition between the US and China. And if you think about how much exposure global investors have to the US, let's say, Magnificent Seven, right? So, everybody, I think, has some kind of exposure to these big Chinese tech names. But if you ask the same question to most institutional investors outside of China, they have very little exposure to these names. So for me, I'm a strategist. I don't really follow specific companies very closely. But for me, I think what DeepSeek has changed is to remind investors that China, investing in China is not just, a few years ago, people were concerned about whether China was investable or not. For me now, it almost feels like it's imperative to invest in China because we are clearly looking at this two-country race in the AI theme.
So with the development that we're seeing in China, the restrictions that is being imposed by the United States, how much of a continued risk is this when it comes to its lack of access to advanced leading-edge chips?
Yeah, so exactly. So I think that's why it's kind of risky to focus on just one or two companies. So I would rather to have exposure to the broader market. Because so each individual company suddenly can face some kind of risk. But for broader markets, right? So I think for the tech sector, what clearly has emerged in the past couple of years is actually, this is, in my opinion, this is kind of the silver lining of the Chinese growth slowdown in the past couple of years, and also the tech embargo imposed by the U.S. Right, because in the Chinese tech companies, they do not have the free flow of capital that companies in the U.S. have access to, and also they do not have access to the most advanced hardware chips. So that has actually really forced Chinese companies to double down on optimization. So they need to really improve efficiency. So that's why after this whole process, we can see that the efficiency gain in Chinese companies is just enormous. So they created such a dramatic cost advantage over many tech companies in the West. So I think, to me, this is really the most important competitive advantage that the Chinese companies have gained throughout in the past 2 years, throughout this growth downturn, and also throughout this technology embargo.
Yeah, sort of force them to go more DIY, right? And it's kind of ironic then that this is a consequence of U.S. policy, although I'm not sure it was an intended consequence from the U.S. perspective. But Wang Yan, your point is, look, if investors need China tech exposure, right, especially AI exposure, rather than look at individual names, etc., it's probably safer to buy either a basket or just an index, right? And I think what you're trying to get at is, and we were talking about this with another guest, likely now that this group is the new target, right, for and the new focus of the government, including credit, etc., there's going to be a boom. There are going to be hundreds, if not thousands, of companies doing this. Many are going to fall by the wayside. There is going to be consolidation, and from the ashes of all that are going to emerge a handful of winners, like what we saw with Chinese EV makers. So, I mean, it's going to be brutal. We need to be braced for that. Yes?
Absolutely. Yeah. So I think this is a replay of a very similar theme that we've seen in many industries, right? So EV is the most recent one. Then before that, it was a solar panel, and then wind turbine, and then even electronics, right? So we see this kind of repeating theme where Chinese companies develop this kind of hugely almost formidable cost advantage, and then through this brutal competition, so whoever really wins out of this competition can really it's kind of world beating. So that's why I would be kind of more comfortable having exposure to the entire sector rather than trying to pick winners.